Hey there, crypto enthusiasts and market watchers. Today, we're diving into the world of Bitcoin and exploring the factors that could shape its trajectory in the coming week. So, buckle up as we navigate through market uncertainty and uncover some intriguing insights. First off, let me tell you, Bitcoin has shown remarkable resilience, trading around $64,100 on Friday. Despite a cautious market sentiment, the bulls are holding strong, defending key support levels. But what's really caught my attention is the institutional demand for Bitcoin. You see, US-listed spot Bitcoin ETFs have experienced significant inflows this week, indicating a renewed interest from institutions. This is a big deal because it suggests that major players are seeing value in Bitcoin and are willing to invest. Now, here's an interesting detail. Data from So Value shows that spot BTC ETFs recorded an impressive $754.69 million in inflows through Thursday. That's a substantial amount of money flowing into Bitcoin. And get this, CryptoQuant's report reveals that Bitcoin whales, those large holders with significant influence, have been accumulating Bitcoin throughout the year. Their balances have been steadily climbing, especially when Bitcoin's price dipped below $60,000. This is a textbook example of buying the dip, and it shows that these whales believe in Bitcoin's long-term potential. However, we can't ignore the geopolitical tensions that are casting a shadow over Bitcoin's upside. The Strait of Hormuz, a crucial waterway for global trade, is at the center of renewed tensions between the US and Iran. President Trump has expressed his belief that the war with Iran will end soon, but developments on the ground suggest otherwise. An Iranian parliamentary committee is reportedly considering a bill that would restrict the transit of US and Israeli vessels through the strait, which could disrupt supply routes and impact global markets. Additionally, there are concerns about potential attacks on Saudi Arabia by Iraqi militia factions in coordination with Yemen's Houthis. These tensions raise the risk of a wider regional conflict, which further dampens the risk appetite and puts pressure on Bitcoin. Now, let's talk about the upcoming US Nonfarm Payrolls (NFP) report, which will be released on Friday. This report is a big deal because it provides insights into the health of the US labor market and can significantly impact Bitcoin's price. The CME FedWatch tool shows a probability of a 25 basis point rate hike in September, but this expectation has decreased from 67% a week ago. If the NFP data comes in stronger than expected, it could signal a resilient labor market, reduce the chances of Fed easing, and push investors towards safer assets like Treasury yields and the US dollar. This could put pressure on Bitcoin. On the other hand, a weaker-than-expected NFP report could ease rate hike expectations, which might support Bitcoin by reducing the appeal of safer assets. So, the NFP report is a crucial event that traders should keep a close eye on. In terms of technical analysis, Bitcoin's price is holding up well so far this week, trading just below $64,200. It's finding support around the 200-week simple moving average, SMA, at $63,776. If Bitcoin can hold above this level and close above the immediate resistance at the 78.6% Fibonacci retracement level, we could see a recovery towards the $78,490 mark. However, if Bitcoin fails to find support and closes below the 200-week SMA on a weekly basis, it could extend its losses towards the ascending trendline around $60,000. The daily chart also shows a mildly bearish near-term bias, with price holding beneath key moving averages. So, to sum up, Bitcoin is facing a mix of factors this week. We have institutional demand, geopolitical tensions, and the upcoming NFP report, all of which could influence Bitcoin's price. Personally, I think it's crucial to keep an eye on these developments and how they interplay. Bitcoin's resilience so far is impressive, but the market remains uncertain. In my opinion, the key takeaway here is that Bitcoin's price is influenced by a complex web of factors, from institutional demand to global geopolitical tensions. It's a fascinating dance, and I can't wait to see how it unfolds in the coming days. Stay tuned, and let's continue this crypto journey together.